Hi, this is Chuck Oliver. Welcome to this week's Cases Saved of the Week. Super excited to jump into this, Davis. We've got I'll say, kind of a younger business owner that can now take a very substantial six-figure tax savings annually, redirect that, and obviously move up his potential retirement for he and his young family. But let's jump into the case study. Go right ahead.
Yeah, another exciting one. It's really exciting helping, not just some of our retiree clients, but some clients that are, obviously want to get to retirement a lot quicker. And this is a great case scenario of that. So go ahead and share my screen here. And yeah, so you see my screen here. Um, Kind of break this down for everyone, right? So here we got this client, their business owner, as you said, their dad, and they got their Schedule C, right? And so income this year is around $600,000, right? So on the right, you'll see kind of the case scenario we're breaking down here today. And so, right, like I said, about $600,000 of annual income you'll see here, right? And that's really where, that's a strong amount of income, right? And right now they're facing about $165,000 of tax burden. They do have some dependents there. They're in the state of Michigan, and married filing joint couple. So what did we do, right? What was the big strategy put into play here? Here's a strategy you probably heard on one of our cases of taxes case study of the week before. But we're tapping into a great program. We use our family ourselves as well as our client families like a lot. And this one's important because we're going to run out of equipment, unfortunately, this year. So for clients that really have interest in this, we'll probably be out of equipment by August this year. And if interested, obviously, please reach out so we can see if this is something for you in your tax planning journey. So, what did this client do? Right, earlier this year, they decided to put as little as $30,000 down to attain five pieces of equipment and start an equipment rental business and use actively Section 179, which allows up to a $1.25 million deduction this year if you have an equipment expense of that amount. You can write that off against your active business income and ordinary income. So here, right, what they leveraged, they borrowed 90% loan to value, so borrowed 270 grand with their 30,000 being 10% down, and now they have a $300,000 deduction as you see here, right? Under section 179 here on the profit and loss schedule C form on the tax return. So as you see here, their income went from the 600s after expenses as little as $300,000 here you see on line 31. So now, what did that really do for them from an ROI perspective, right? So we'll go back up here to the 1040, and you'll see this income reported here, right? And so we'll break this down, right? Before the strategy in the Section 179 deduction, they had $600,000 of income with $165,000 of tax burden, state and federal, and a 27.6% effective tax rate. After that $300,000 deduction, it also opened up other strategies, right? So it's one thing to do a strategy, right? As you know, Dad, and it's another thing to really open up other horizons of what that strategy is doing for you as a business owner, right? And making you a business owner that you might have not utilized before. So this deduction before, their income was too high to incentive or to implement something called qualified business income deductions, or QBI for short. Right. But after, because we were able to take that Section 179 deduction and lower 600,000 of income to $300,000 of income, it allowed us to use QBI here, as you see on line 13, another $54,000 of deduction. So again, just more tax savings using already a great tax saving strategy. And so all combined, it brought their income down to $217,000 to about a $40,000 tax burden, where again, they were facing 165,000 before. But the big win here is we took them from a 27.6% effective tax rate all the way down to 6.7. So that
Wow.
was exciting, right? And here the ROI is fun to share, right? This one, for a $30,000 investment, they saved in first year tax savings $125,000, right? With a first year ROI of 418%. And even more excitingly, getting that tax rate, not a single digit return reduction, not a teen digit, but literally a 20.9% reduction in tax rate effectively, right? It's all about the effective, not the marginal here. And that was the big ROI here for this week's case
Yeah.
study, Dad.
Yeah, and I think a couple of key things. One, if people picked up on it, so this couple he already is a business owner, And the last thing he wants to do is go out and have to start a whole nother business. So the integration of the strategies that we use are not to disrupt somebody's day job. It's to actually create the least intrusive with the greatest tax deduction. So as an example, Davis, as you and I talked about in this particular case, this particular client on just the first year tax savings alone reinvested over, let's say, an average interest rate of 8% over a specific period of time. He more than 10 times turned that into 10 times that of added wealth over a 30-year period of time. So think about it, saved 125 grand and now saving that 125 grand, which we have strategies that will keep the IRS out of taxing that money again, grows into just the 1 year of tax savings of over $1,250,000. But then this particular client is going to redirect the tax savings, and his income is only going to continue to scale from here, and redirect that tax savings on an annual basis and put it somewhere where the government doesn't get to take a bite out of the apple of additional tax again. And just doing that over a specific period of time, let's say, let's say in his mid 30s, he wants to hang it up in his mid 50s or choose not to work as much or what have you. That grows into just redirecting that tax savings on an annual basis to over $6.1 million by taking otherwise spendable taxes. And now instead of giving it to the government, he can redirect that to be a better steward of his tax dollars for he and his own family and to make a difference, obviously, and spend more time with his kids. They're a young family, et cetera. So this is exciting to see a younger business owner be able to get these strategies applied and not be what we typically see some of our older clients that are saying, gosh, I wish I would have learned this 20, 30
Yeah.
years ago. This is why these strategies can apply to all age groups. And typically, the sooner you start, the more time you have to redirect and compound these tax savings to give you a huge advantage of your wealth optimization. So the idea here, folks, is already being mentioned that some of the strategies have limitations to inventory, like the heavy equipment and so forth. And when you hear loan and so forth, this is where a lot of clients have said, gosh, I'm so glad I took the time to go to taxessave.com. There's a place there where you can just request, right, your own personal saving tax optimization plan analysis. But we want you to review the case studies, right? So we have a like kind of an episodes, if you will, of case studies where at the top of that particular case study, there's 3 bars. You can click it. It'll take you into prior case studies so you can kind of familiarize yourself with the multiple strategies we have that we've been helping clients with. But don't delay. This is not a time to sit on the sidelines with the uncertainty of the Tax Cut and Jobs Act and what's going to happen here in the next series of months. We don't know, but we do know this. There's going to be more deficit spending. There's going to be continued deficit growth. And we know that they're trying to extend, right, the debt ceiling another $5 trillion. And you're hearing all this back and forth. The reality is control what you can control. Go to taxessave.com. That's taxessave.com and learn what you can do, right, to reduce your taxes with the best strategies. And we help you do that so you can see for yourself what makes the greatest ROI so you can redirect these otherwise spendable tax dollars to things that you support and take advantage of that. Go to taxessave.com and see what you can save today.